Good afternoon, this is Bob Iaccino coming to you from the CME Group trading floor in Chicago. Talking crude oil futures. Tough to talk about energy today without talking about natural gas being up 1% off of the surprise draw from the EIA figures for natural gas. But crude oil is slightly more interesting, even though it just basically flirted on the WTI contract with unchanged all day. It'd be up a few basis points, down a few basis points, and essentially we're going to call the close today as unchanged. But wasn't exactly unchanged, but it was close enough. But what's in the news for crude oil really is the Iranian nuclear deal. May 12th is the deadline. It's fast approaching for President Trump to ratify the agreement by stating that Iran has either been in compliance or they have not been in compliance. And if he states they have not been in compliance, and it is his sole discretion, he doesn't have to prove out that they haven't been in compliance, the deal falls apart and Iranian sanctions go right back in place. So when we talk about sanctions, we're not talking about new sanctions, we're talking about the old sanctions, and the old sanctions would almost immediately take about 350,000 barrels of crude off of the open market, forbidding some of our allies and all of our businesses from dealing with Iran and crude oil. So that would be another big sort of hit to crude oil supply and could cause a rally. We've got a stronger dollar today without any significant crude news. Should drive crude a little lower. Hasn't done that. It could be the specter of this Iranian nuclear deal starting to play out as we continue to see a slightly stronger Brent contract, where the Brent contract is where the OPEC, the Middle Eastern oil, is actually priced. So today, while WTI was virtually unchanged, Brent was up about 0.5 percentage point, and that brings me to the Brent WTI spread. This spread has been slowly widening over the last few days, and today again, with WTI near unchanged, Brent up about 0.5%, it widened again. Now there's no real fundamental issue going on in terms of the widening of that spread. It used to be much wider because WTI used to have to be discounted because of transportation costs. But now that the U.S. can import out of ports, we've got more pipelines than we used to have. Rail lines are filled with crude oil. That discount has sort of gone away. Having said that, the idea that Iranian crude might come off the market has pushed Brent a little bit higher, and WTI has not had the same fundamental reason to rally as strongly. So that's the issue with that widening spread. When you see that widening spread, there could be any number of reasons. It's in place, and the reason is right now, again, going back to the Iranian nuclear deal and the fear that if any crude oil comes off the market, it will be Brent crude, not WTI crude. You see a similar spread between WTI and Canadian crude, but Canadian crude is priced to WTI, so it's a little bit different. Anyway, having said that, one more thing we're looking at is refinery utilization. Now, I've talked about this before, that we would know when we were going into refinery turnaround by the refinery utilization number. What refinery turnaround is when refineries slowly shut down sections of the refinery for maintenance and retooling to change from winter blend gasoline to summer blend gasoline. And when you know that's happening is when you see surprise crude builds, which we saw in the API report on Tuesday and the EIA report yesterday. We saw builds instead of draws. When draws were expected, you saw the refinery utilization number drop from 92.7 to 90.8. That's where that build comes from. As the refinery shut down certain sections of the refinery, they're not drawing crude oil to produce refined product. So you need to see the two things happening to know, as somebody not involved in physical crude, when the turnaround has perhaps begun, and it seems to have begun based off of those two figures. So what does that mean? That means that crude oil draws in the numbers, crude oil builds rather, in the EIA and the API figures aren't necessarily as bearish as they would normally seem, because once the refineries kick up in full gear again, especially with where gasoline is in terms of inventory levels, they'll probably pull quite a bit of crude oil out to catch up on production. So right now, unchanged on the WTI for the most part. Brent a little higher, that spread widening. This is Bob Iaccino talking crude oil from the CME Group trading floor in Chicago.